So, ladies and gentlemen, I would like to greet all of you who are with us here in Davos, and welcome to everyone who's joining us via the live stream online. We're talking today about the future of fintech. I don't know if it's a coincidence that we happen to have been put across the crypto HQ just across the road for those of us in Davos, but I guess that's one topic we'll touch on. Before we kick off the discussion, let me introduce our speakers. We have sitting here to my left, Spiros Margaris, who runs a business called Margaris Advisory, but is very regularly voted among the top 4 or 5 most influential people in fintech. So we're very pleased to have him with us. Thank you. We have Vladislav Martinov, who's an active and well-known investor in a number of blockchain startups, and is also the chairman of the Ethereum Competence Center. And so thank you, Vlad, for joining us. We have Greg Thane, who's a long-time emerging markets entrepreneur, financier, and is currently chairman of a business called Hyperion Fund, which is a solar power investment business, and he'll be able to tell us a bit more about that. We have Cam Baithwaite, who's managing partner of Redstone Capital, which is investing in a bunch of fintech businesses in Russia that are all going through the roof. So he's a busy man to get, and we're happy that he joined us in Davos. And last but very much not least, Brian Pallas, good friend of ours, founder and CEO of Opportunity Network, created in 2014. This is a fantastic business that's been using online and digital and technology to bring together companies and money in a way that couldn't have been done with the banks alone. So Brian, welcome to the panel.
Thank you very much.
Now, I guess before we look to the future, I'd like to go to the man on my left here, Spiros, and just, fintech is one of these sectors that's just moving so quickly. Every day there's a new thing going on. So maybe before we go ahead, look at the last couple of years, and what is it that has happened that surprised you? What did you not expect to see that we're seeing? What was the big surprise for you?
I think last year was the pivot year where fintech exploded. Before I told my friends what I'm doing, that I invest in fintech companies, I give speeches, and even friends who liked me didn't understand it. And they looked kind of sad, said, oh, poor guy, what is he doing? So now the nice thing about blockchain, fintech, Bitcoin, all this stuff is it became mainstream. And mainstream is good because through mainstream acceptance, more people will use fintech products, and think, oh, maybe there's an alternative to banks, to insurances, to a lot of things. And that's what happened in my view. And it's just the very beginning. Fintech is here to stay. Blockchain, digital currency, all this stuff is here to stay. A lot of companies will disappear, but the industry is here, and you meet so many smart people, which we're going to hear now more about it. Is it? Did I answer?
Yeah, people who are actually doing things. Yeah,
exactly.
Yeah. So listen, we're in Davos, and so we can't be in Davos without talking about big, global, weighty issues like the equality of the universe and all of that kind of stuff. But if we think about sort of social equality, bridging the opportunity gap between markets, does fintech help? Is fintech a solution? I'm going to go to Greg, and then I'm going to hand over to Brian as well.
Fintech is definitely a solution. The example I'd like to give, I wasn't expecting this question, is some of the poorest people in the world have to work in different countries. They go from Bangladesh to Egypt. They're working at $200 a month. And historically, they send their money, and they get charged $40 to send their money. Now, through mobile technology, you can send the money for a fraction of that, a real fraction. And this is one of the big changes that is going to make the world a better place. Fintech is going to give accessibility to the poorest, to the unbanked, and it's going to make, I think, life slightly better for many people. Anybody want to add to that?
I would agree with everything you said. I think that fintech is a bridge for many people to start doing things they're doing today at a much cheaper price. I also believe that fintech enables them to do new things, and especially to enable them to do things in geographies where those things were not possible before. You needed all the infrastructure of a developed country to be able to contribute to the global economy and earn your living and your salary. We see more and more that digital infrastructure enable companies and work to be done locally, doesn't matter where it is, making competitive also countries and populations that had to come to other countries and then send the money back. And so what we see fintech going, and what we hope to contribute, is to be able to enable these countries to play in the global economy as their standalone country and build their own infrastructure.
I'm going to stand up here to help the logistics, but when we talk about the sort of the opportunity gap around the places, and you guys, Greg and Brian, you've made a couple of comments and assumptions that I think I'd like to actually come back to maybe and challenge you on a little bit. But before we do that, again, one of the other divides is sort of kind of this emerging markets universe, developed market universe, and not everyone has access to the same sources of capital. And if you're you can be a great emerging markets business, but if you happen to be from a country that isn't, flavor of the day in the world at any one given time, you don't necessarily get what you can deserve. On the other hand, you look at some of these emerging markets companies, and actually the pace at which technology is growing, whether it's e-commerce in Russia or anything like that, sometimes the technology in these emerging markets goes an awful lot faster than it does. So is there a leapfrog effect that's to the benefit of emerging markets, or is it still going to be more of a challenge? And since Cam works in Russia, I'm going to give him the microphone.
Thanks, Tom. I think there certainly is a leapfrog effect. I think the classic example that's used in referring to leapfrog is countries like Russia and a lot of the emerging markets never dealt with original financial instruments like checks. And so what we've seen over the last 10 or 15 years is these emerging technologies allow people to both transfer money, access credit, and access other forms of services, and those tangential to fintech, like identity verification services, that allow both people in developing markets and industrial markets to transact much easier. I think what we see now, though, is less of the leapfrog effect, but I think with the emergence of these platforms, and both the blockchain and crypto-like platforms, and the should we say that the platformization of bank platforms, where banks are providing the money pit, and then the plumbing is now becoming much more open. And so rather than a leapfrog effect, I see this much more effectively customizes the products to the local markets. So an example in Russia, for example, is that they used to be very, very proactive on these payment terminals to put cash into terminals to pay for everything, mobile, home electricity, internet, everything like that. That's now being superseded by more sophisticated and micropayments via cards and even some of the blockchain technologies. Whereas in places like East Africa or Kenya, you're seeing mobile providers become essentially financial service providers, as people are able to, with a much lower access to technology, they're able to use basic mobile phones, not even smartphones, to manage their daily finances. And so that is also what I think is a benefit of what we broadly call fintech, improving access to financial services using technology. So it's less about leapfrog, but more about broadening and leveling the playing field to allow local innovations to develop further.
So, but before we move on to other speakers, I want to come back to Brian, and maybe Greg will also have a thought on this, and challenge one assumption, which is that with all of this new technology that's coming out, it is going to bridge the opportunity gap. It is going to make things more equal, accessible to everyone. I think probably, yeah, it makes sense, and hopefully that's the way it happens. But there's one issue that I can't sort of help but think about. We're living in a digital age, but as someone said, a lot of us are still analog. And the individuals and some of the smaller businesses aren't necessarily actually where they need to be able to tap into this system. So how do you address that issue where you have all of this fintech capability, all of this technology that's there, but not everyone really feels like that's part of their universe? And so what do guys like you running these businesses do about that?
Sure, and that's a great point. At the end of the day, when you are running a business, it's not that you think of yourself as, oh, today I'm going to innovate my business with fintech. It's not that you wake up in the morning and that's the first thing you think about. What you think about is, I want to get my business larger, I want to get my business more international, and whatever tool comes to you in order to achieve that, then you're going to leverage. So what many fintechs are realizing today, and us with them, is it's very hard to go and convince them because they don't know you, they don't know why they should trust you, etc. And on the other side, the traditional institutions such as banks and so on are not providing the type of service and the cost basis, etc., that those customers would want. So there are two types of fintech, really. The ones that try to replace the banks, but they have to do the marketing on their own, and like banks, they are facing issues in the marketing side rather than in the service and the product side. And on the other hand, you have fintechs that partner with banks to leverage the relative strength of each organization. So banks have access to their customer and has the trust of the customer. Fintech has the product, and by partnering together and using these banks as a backbone and the access they have to the customer, it makes it also very natural for the customer to access what we do, and it doesn't feel like they're doing something weird or different. And so we like to think of that as digital disruption, where you go and replace the incumbent, versus digital symbiosis. And we want to play the digital symbiosis also because the more you try to fight against the incumbent, if you win, you're going to take many people out of their job because you're going to kill the banks and all these institutions. And again, you will have something very big to fight against, which is not something healthy to do when you're thinking of building your business. So one thing we've seen as a trend in the last few years, everybody started with digital disruption. Now everyone is really going in the digital symbiosis direction.
So you talked about the symbiosis with the banks as opposed to disruption of the banks, and that actually leads me on to the next topic that I want to bring, and maybe we can bring Spiros and Vlad in to give a view on this. I think that we'll go with Vlad first. Controversial question, but you sometimes hear that the CEOs of the big, let's call them traditional banks, for want of a better word, and some of them are incredibly outspoken when there's sort of even the subject of blockchain comes up and crypto comes up. They're kind of talking it down, but part of me thinks, well, you sort of would, because you're in a different, you're in a different camp to this, and so until you go fully onto the other side, you have to talk it down. So when you hear these big sort of CEOs sort of, pushing down blockchain, is that bravado? Is that just their posturing? They have to do that? Or do you think that really the jury is still out as to whether the traditional banking model here is going to survive? I know this is not directly relevant to what you're doing, Vlad, but maybe we can nevertheless ask you to give a view.
Yeah. Thanks, Tom. Well, I don't know, but I can make an assumption based on the number of talks I have with banks and the CEO of banks. And first of all, I would differentiate two groups of banks. One is smart guys who understand that the blockchain is something you cannot ignore. You need to do something in order your bank will survive in the future. And there are some banks which is, for some reasons, keep their eyes closed and don't realize this. There is less and less this type of banks from the second group, but still. There is another thing is when people speak on public and when they talk about blockchain in one-to-one conversation or in a private meetings. So frankly speaking, I never met any bank or bank executives who would, in a private meeting, would challenge the fact that the blockchain will change the business and fintech industry within relatively near short-term perspective. So, but publicly, sometimes for some reasons, political reasons, they have to probably talk down the blockchain technology to slow down the process, give them a little bit more time to prepare for this big change. I don't know the reason, but that would be my explanation why you quite often see the chairman of one or another big bank talk about blockchain as something which is not real, which is not true.
Spiros, thank you for that. Now I'm going to sort of continue the question here, but just give a real life example to illustrate one of the ways I see this. So 2 weeks ago, I'm in the final stages of buying an apartment in France. And part of this process is I need to send money from my UK account to a French account to make some sort of, one of the payments associated with this. And it wasn't actually a huge amount of money. I call my bank, I send the instruction. It takes them about a day to sort of process the instruction. And then it takes them 3 days or before actually the payment has gone through, and then it takes another day before it's arrived. So that took 5 days. Now, I was actually in Moscow at the time, and I worked out that I could have flown to London, I could have gone to Canary Wharf, I could have collected the money, I could have got on a bike and put the money in a rucksack, and I could have cycled through some vineyards in France and still made it to Nice before the money did. Isn't that a really big problem?
I mean, yes, of course, that's obviously a problem where blockchain comes into play. I mean, but that's a problem. But fintech has solved that. I mean, look at TransferWise, Revolut. I think that's not the issue anymore. I think banks realize that the problem fintech companies might have is, for instance, compared to Revolut or TransferWise, is you have to decide. Do you want to compete with banks, or do you want to provide them a service? TransferWise obviously goes the path of providing this perfect service to banks as a white label. Revolut, banks will never, a great fintech company will never work with them, because basically they want to destroy them. So that's the decision you have to make. But I think this transfer of money, that's solved. People know it's coming. I mean, it's just the banks still squeeze people who are not familiar that the solutions like this are out there or not comfortable using it. And but I think that's a question of time. They know that, and that's why I think that problem will be solved.
Let me ask you a follow-up question on that, though, because if, even with the TransferWises and these different sort of solutions that are coming out there, I don't know if you have the data, but my guess is it's still a relatively small percentage of people who are actually plugged into these new solutions and using them. So, I mean, one, do you agree with that in relative terms? And so, actually, how long is it before that changes? So if we're savvy, there is a better way of getting a bike and cycling to Nice. But how long does that take?
I always give the example of a ketchup. You know, when you have a full ketchup bottle and you turn it and you shake, nothing comes out. But when it comes out, it gets messy. That's how fintech will be. All of a sudden, it's getting messy. Messy not for fintech, but for the banks. You know, it feels like, I mean, I hear a CEO, a chairman of a Swiss bank, who said fintech is not a threat, it's nothing. Such an idiot, I won't mention his name, but I mean, saying this, not because I come from fintech, because it shows ignorance, because what people don't understand, I'm very passionate about that, is fintechs are not a threat to banks at this point. But fintechs will be enablers for tech giants, for large corporations to get into the insurance business, to get into the banking business, and they rather partner with a fintech company which have the same mindset that business is done through technology, and then you have a problem. That's, sorry.
So I feel like if we can bring Sporas a glass of Prosecco, we might be able to get him to tell us what the name was of the person who said it. Yeah, exactly. You guys want to continue? Yeah.
Well, I'd also question what your exchange rate was on your money from your bank, because I'm sure you got done on the exchange rate. But I think one of the things you've got to think about is where a bank's going to make the money in the future. They're not going to make the money from credit cards anymore. Increasingly, they're getting squeezed on mortgages, or they don't want to do mortgages. They don't want to lend money to small businesses. So I would question very strongly what is the future for the traditional bank. On one of the other areas of business I have, we had a good look at Barclays, English bank. And that is closing banks at a very, very quick rate, because the old-fashioned brick-and-mortar bank is completely, frankly, a loss leader. And when they analysed one of the branches, I think they closed 1,109 branches last year. When they analysed one of the branches, they only had about 60 active clients who were coming in, you know, most weeks, and they've got 10 staff in the branch. So the old-fashioned concept of banking is dying very, very quickly. And I think it is going to be like the exploding ketchup bottle. It's going to be very, very quick. Now, when you look at emerged markets, because again, emerging markets have already emerged, the big story is the growth of the middle class. China, Indonesia, Philippines, all across Asia, South America. The growth market for many of us is the growing worldwide middle class. And they're going to leapfrog straight into fintech. They don't have any concept of what the old-fashioned check is. Thank you.
One final question on this side of the room before we go back to the other, but maybe Vlad, just one prediction from you. I'm sorry, I'm asking you difficult questions, but Spiros said once the ketchup starts to come out, it's going to get messy. So how long before it gets messy?
Well, it's very provocative questions. I don't know, but I can tell you what needs to happen in order it happens. First of all, it's well, not in terms of importance, but there are a few things. First is usability. Current IT payment system, in particular, which is based on the blockchain, is not really appeal well for the average consumer, right? You have to be a relatively technical person to be familiar and be comfortable with these solutions. So usability. Second is the security. And again, when you deal with certain blockchain payment system, you feel a kind of that anything can happen, right? Despite the fact we understand that from technological point of view, it's probably one of the most secure solutions, but still. And the third is scalability or productivity of the system. Relatively, it's very slow, and this is basically technological infrastructure challenge, which probably the best brains in the blockchain working right now how to solve. Sooner or later it will come. As soon as it will come, and the speed of transaction will be comparable to Visa or any other payment systems, basically that will be the moment when, as you say, the ketchup comes out. Yeah. So that's well, it's very difficult to predict timeline, but 2, maybe 3. It's a relatively few years, not like 100 years or 20 years.
And the timeline, it's like, you ever look for an address? You look for an address and you ask someone on the street, and it says, oh, it's right here. It's the same thing with blockchain. Probably, we're going to be there quicker and surprisingly.
Exactly, quicker than we expect. Yeah.
Yeah.
And one more point I want to make about Greg, that what's the role of the banks in the future when this happens? Well, I think some banks which will prepare themselves to become IT company, service provider company, to provide this payment of wide range of payment or any financial services in a new era, competing with IT companies. Basically, they will transform into IT companies providing certain services. The better competitive service they will have, the higher chance they will have to survive.
So I feel like, one, I'm never going to be able to look at ketchup in the same way again, but without at least thinking about more challenging issues. I want to come over to Brian and Cam to sort of continue this discussion, but looking at it, I guess, from a slightly different side. Listen, both of you are running big fintech businesses. Now, so I think that it's reasonable to say that there is probably a certain type of company that you can help that would never have been able to tap into the sort of the traditional funding universe, right? And probably a certain type of company that doesn't really need fintech yet because the traditional universe is there to sort of fawn all over them and basically give them what we need. Where is the line that is between the two? When do people sort of cross the line up or down? Where is it today? And where do you see that moving in the coming years?
There are some obvious candidates for companies that will approach fintech lenders before banks. A lot, especially the very small businesses, individual entrepreneurs, and small businesses who have perhaps a non-traditional field, they don't generally have access to bank capital. And that's the same problem whether it's in emerging markets or in developed countries. So those are the types of businesses that I feel drive a lot, especially lending businesses. A lot of the sort of peer-to-peer development that's happened over the last few years has been driven by very small business. But I think you get into trouble if by drawing a line between the types of businesses that approach fintech versus those that approach banks. Because here I agree more with what Brian was saying, is that the model is moving away from this sort of disruption, let's take down the banks, and more to what Brian calls symbiosis. Because in our fintech businesses, in a lot of cases, we're cooperating with the banks and offering credit products, money transfer products, security products, and things like that, that needs bank infrastructure and actually helps those banks monetize their client base better, and their clients are happier because they're receiving a white label solution that allows them to access credit products or something that they didn't have before. So I think the view that it has to be either fintech providers or banks is perhaps a dangerous one, and this cooperation and symbiosis model I think is taking hold in a lot of the places, and I actually see a very significant role for banks in the future. They will change from perhaps the financial supermarkets that we see today, and different pieces of their business today will be taken by other regulated or non-regulated business, fintech players or others, but banks retain a role as the custodians of the money, as perhaps the verification of identification, and a number of regulatory functions, which especially in emerging markets are a much bigger obstacle, because, for example, in Russia, maybe would love to use TransferWise or other businesses. Unfortunately, they don't have ruble access, currency controls, and other things make it impractical. So the sooner that banks can actually agree with a regulatory structure in their own markets, and then those that will do well, I believe, are those that can identify what their core competencies are, what they need to do under the regulated market, and which parts they can outsource and monetize to fintech companies and others.
So thank you very much, and I agree with what you just said. I believe that the role of banks in the future is mostly around guaranteeing regulatory compliance and getting the marketing to the clients, so holding the access to the client. And they will plug in to their backend all these sort of services, and they will retain a margin out of it. And I believe that's a sustainable role, because the hardest part is to onboard the customer. And why would you have 50 fintechs onboarding the customer for 50 services, where you can have one-stop shop that already onboarded them? That's called bank. So I don't see fintech and banks competing, especially because the core services of the banks are being kind of disintermediated today into low-margin businesses, and becoming that competitive, it's not going to be where the banks are going to make most of their margins unless it's on huge volume. So it can work on retail, but when it comes to commercial and corporate banking, which is the area where we work, at the end of the day, banks are willing to move away from low-margin, commoditized financial products and move into the relationship business with those customers, enabling them to do things that wouldn't be possible otherwise. At the end of the day, when you think of a customer, you have to add value to them, and there are only 3 ways you can add value to a customer. Enable them to do something they were not able to do otherwise, enable them to do faster, or enable them to do cheaper. There is really not other source of value. And so depending on which segment of a customer you're dealing with and what are the capabilities, maybe for the smallest one it was a service that was not kind of available before. For the larger one, it would be something that would be cheaper or faster. So it's not that you have to add the same value as long as you make it better. And these are the 3 criteria you have to follow. And by partnering with fintechs, you probably have a better chance of getting there.
Thank you. Now, I see the BankX crew here in the crowd, which reminds me that, in fact, we promised also to talk about ICOs and cryptocurrencies. They took the market by storm very successfully last year and continue to do some fun stuff. So let's switch gear. Let's talk about ICOs. Now, one of the challenges that I face, being someone who was doing sort of traditional communications for traditional fundraising efforts, when this summer people started to approach me about ICO ideas, I could never understand what they were talking about. But what we've seen, and it's been demonstrated to us, is that there are some wildly successful ideas from the kind of the funky sort of crypto universe that, in fact, we just haven't really figured out why they're doing it, but soon it's about to become clear to us, and they're going to maybe change the world. I have a question, though, and we'll start with Greg, and then I'd like to bring in Vlad and Spiros as well. Is ICO and the sort of crypto fundraising, is this about these kind of crazy, funky ideas that are going to change the world, or might we see this move a little bit also into the sort of mainstream and just be a more efficient way of raising funding for sort of real-world businesses, for want of a better word? Greg, we'll start with you.
Thank you. ICOs, I believe, are the new way of raising money for smaller projects. When I say small, generally I'm talking sub 100 million. What an ICO does in many ways is it gives you access to the whole world, and it gives you transparency. You can track what's really happening. Now on the train here, because I'm commuting in daily, I couldn't get a hotel. Well, I got a hotel, it was 10 minutes away on the internet, but there's a mountain in between, and the car was going to take me 1 hour, 52 minutes.
Even blockchain can't solve that problem.
Even blockchain can't solve that problem at the moment, but anyway, so I'm commuting in from Zurich. And next to me were a team who are doing an ICO in April, raising 100 million for charity. And I think one of the issues, having been involved in a number of charities over the years, is transparency and where the money is really going. Because I think many people in the world will give money if they really believe it's going to end up in that village in Africa with no school. But if 80 cents out of the dollar ends up maybe funding the office and the chief executive, etc., you get where I'm going. So I think ICOs and blockchain are fantastic enablers. I think it makes you be able to develop a business idea, launch a business quicker. Now, I think the trend is changing as well. You said wacky ideas. I think increasingly on ICOs, we're talking about you have to follow the proper process. You have to have transparency. You have to have proper due diligence. You've got to have proper contracts. And we very much are following on the ICO I'm involved with, following all the main guidelines, the European guidelines, the American guidelines, even though we will not market anything to America, but we're checking and making it as far as possible compliant with all the main regulations. And I think you're going to see the ICO very quickly moving to being the main way of funding for smaller projects.
Yeah, I 100% agree with Greg, and I'd like to add a few things. First is, I believe it's revolutionary fundraising way. And however, I see a certain change in the trend, and if we 1 year ago see a lot of successful ICO in terms of how much money they raised, today we see less and less companies which achieve their soft cap. And also we've seen quite a lot of technological startups which was focused on infrastructure. Today we see a little more applications, solutions type of ICOs. And also like a year or 1.5 years ago, we've seen like quite crazy investors who didn't really care much about where the money go. They just was high risky, just I put certain amount of money into this or that startups without any preliminary, let's say, small due diligence or assessment of startups. Today investors becomes much more smarter. They look into white paper. The quality of the white papers substantially increased. And people look at if there is a product available, if there is a business available, if it's just idea on paper. People look much deeper into financials, forecasts, into roadmap of the product, etc., etc. So from my perspective, it's changing quite fast. And also, if we talk, or community talk like 1.5 years ago about, okay, we don't need classical venture investors or seed investors. It's completely kind of absolute thing. We will get money and will be successful without any involvement of professional investors. Today, we realize that's not the case. Today, there is more hybrid model where professional investors either get on the pre-ICO stage, helping team to come up with right documentations, to do a proper work on the business model, on the financials, or we even see that some ICOs involve professional investors after ICO, again, because they realize to be smart with the idea and to have a great R&D team is not enough to be successful commercially wise. So from my perspective, again, I believe it's a revolutionary new way to do fundraising, which might the whole fundraising process much more efficient. However, that doesn't mean that professional investor will not have any place in the future.
Spiros, maybe you can add to this from your perspective.
Not much, because the boys said almost everything, you know. But the thing, you know, we all hear about ICOs, the bad apples. But that's normal. It's like the Wild West, you know. I mean, if we lived 100 years ago, 150 years ago, life was different. But what we see now is, as Vladimir said, the quality of the ICOs increases because they realize it's not only fundraising, you have to deliver. But if you come across an ICO where you believe that those founders have the right team, the right support, and they have a product, then it's a good idea because, I mean, it has its place. And the nice thing is that when the bad apples happened, and some few will happen still, people didn't know about it. So it's actually nice. The more popular ICO becomes, the more professional, less bad apples will appear. And so it's very positive for the industry. That's all I can say. I mean, for me, it's ICOs, venture capitalists, they all have their place. But I think for smaller projects, even better.
So I'd like to go over to the other side as well to give the guys from the other end of FinTech to give a view on this. But before I do, I want to come back to Spiros and Vlad here and actually still challenge one thing here. So I think probably in a FinTech panel, we're probably all going to agree that there's something big going on here that has the potential to be, even bigger, and this is more efficient ways of raising money has to be a good thing. When you look at the way that IPOs are structured, it's months and months and months just to do things that could have clearly been done with a button. That said, there's so much going on. This is moving so quickly, and there are some great businesses. Some of them are in the room here, but there have also, there are some maybe less great businesses. Let's put it like that. But on top of that, you have two big issues. Number one, the regulation isn't in place, and so people are talking about it, but they can't talk about it fast enough to keep up with the pace that things are going. But also, it's not just about regulation, and it's not also just about people who are trying to abuse the system. Investors in these types of transactions don't have the frame of reference that they have when they're looking at an IPO. With an IPO, you know exactly what you're looking out for, you know exactly what the issues are, and basically you know exactly what to zero in on. Here, that's not the case. Now, so the question is this. Do you think that it's possible that this ICO sort of movement can seamlessly, slowly but surely, but seamlessly sort of move into the mainstream and regulation to sort of seamlessly catch up in time? Or do you think we're going to have a big crisis before that happens?
I hope the first one that it evolves, it becomes more professional, it will learn from IPOs, which, I mean, again, people get screwed with IPOs. People might be screwed with ICO. I mean, people use fiat money, dollars for money laundering. People use Bitcoin maybe for money laundering. I mean, it's like a knife. You can use it to cut bread or cut someone. So there's no good or bad. I think the way I see it, it evolves beautifully. And people will copy great concepts. So if somebody does a new ICO and puts new processes in, and the industry realizes that it appeals to the investors, people will copy it because I'm an opportunist of great ideas. If the cleaning lady, not disrespect to a cleaning lady, comes to the table and gives me a great idea, I don't care. I say, yeah, fantastic, we'll go for that. So the industry, we are in it. We're looking for the great ideas. When I hear something, I go for it. It's not a corporate thinking, thank God.
Well, I believe that first of all, it will be painful. It will be some, let's say, I don't know what's the right word, but some crisis, as you mentioned. Well, the reason is simple because the last 2 years there was a lot of bad ICOs. And I think as soon as people realize they lost money, that will be the crisis because the team didn't deliver, either on purpose or just because they didn't have capacity to deliver or any other reasons. So, but I at the same time, I believe it will become a mainstream. And because and it's become quite fast. It will not be slow and step-by-step process. Because even if you look back for the last half a year, there is a lot of rating agencies who start rating professionally different pre-ICO projects. And there is also concept Vitalik recently announced decentralized ICO, when the concept is basically when you collect money for the idea and the product, but you, as a venture investor, you don't make all this money available right now for the team. You basically split the process on several steps, and based on delivery of the team on a certain kind of phase, you then make another portion of money available for them to continue developing the product or the business. So, and there are many other things happens. In terms of legislation, I talked to many different governments and startups in different jurisdictions. First of all, for example, in Russia, when we talk about ICO, and just we find a way in our current legislation without any change. In the current legislation, ability to funds and call it as as we call it, so cooperative movements. We used to have it in the back, very popular. And right now, when different individuals come together, like to fund certain things, that can be kind of applied for some of ICOs we do in Russia. In some other countries, yes, the legislation needs to be changed. But at the same time, the countries and jurisdictions which suddenly become unfriendly to ICO, that's not, well, I believe it's not a huge problem, because in the current global world, and in particular in the blockchain world, is so easy and fast, the capital and the talent and team moving from one jurisdiction to another. It's like 2-3 days. I remember a few cases, and Chinese friends told me about a few cases when certain legislation becomes tougher and tougher on them, and just took them like a week to move their whole business into different legislation, and in capital, teams and talent. So I think that will make countries to think twice before they make unfriendly legislation toward ICO, because if the country embrace ICO, they attract talented people, they attract startups, they attract capital of the future economy. So if they want to be competitive in the future, they probably should not come up with unfriendly legislation for ICO. So that's why I believe that will become a mainstream soon enough.
Just before I take the microphone over to the other side, I want to come to you guys, Vlad and Spiros, just on one more question to follow on from this. Now, you know, if we compare the sort of to the traditional world of finance, pockets of capital, and so on, as you know, there's a sort of usual understanding. You know, U.S. massive investment market, probably U.K. after that, and everyone has their idea of basically where you go on the roadshow, where does the money sit, and there's an understanding of where the real financial power is. Does this, given that this is by definition shaking up many aspects of the current financial system, do you think, and some, you know, in some countries, including some slightly unexpected countries, have been more pioneering in this than others, do you think this has the potential to fundamentally change where the sort of the sources of global financial power are around the world?
Eventually, but I think it's still going to take a while. I mean, I have a good question, never thought of that. But eventually, yes, probably, as Vladimir said, the thing is flowing. You know, you block it here, it goes somewhere else. As it becomes mainstream, then the game changes. You know, a lot of things, you know, because then it doesn't really matter. Where, I mean, the funding will come from anywhere.
Yeah. You have a view on that quite quick, Vlad?
Sure.
Well, I think it will change a lot of things, and it will change, what's the right way to say. For example, today we know that a lot of money coming from China and United States, because this is where the wealth, right? Coming to ICOs, funding blockchain projects, etc. But it's not controlled by the government. It's coming from individuals, from people. So from this perspective, I expect for the next few years that the source of funding, probably geographically speaking, will come with the same countries where the biggest wealth is, but it's coming from the private individuals, from small businesses, but not from the government. That will be dramatic change. So who is controlling this? Nobody will control it. It will be just democratic, free, flat world. So that's a big change. In second point I want to make, some small countries which is really looking for any opportunity to make their future from economical point of view much better, they come up with very liberal legislation towards the blockchain or ICO. And Gibraltar, Belarus, and I don't know, Singapore, and you name it, right? So, and Emirates, and many countries who want to be who want to accumulate capital of new economy in the future, they come up with liberal legislation. That might be change the way the wealth will be allocated and distributed in the future.
Great. Did you want to add before I hand over to, were you going to comment on this, or you want to come in?
I wanted to say that, of course, you will get the crashes. You are definitely going to have 2-3 crashes over the next few years. But could I point out that 80% of the world think that property prices only go up? I have so many conversations over the last 30 years, I'm going to put my money in property, because property always goes up. And property crashes. Everything goes up, and it has problems and crashes, and then it recovers and goes up again. So I believe there will be problems, but I totally believe that this is the new way of raising money. But the switch you're going to see is to much more asset-backed and solid business ideas behind the ICOs, not the more speculative ideas.
I think the only thing that might not crash is the price of Davos hotels this week, but it's, although, you know, who knows. Brian and Cam, I want to come over to you, and I'll give you a choice of questions. One, if you have particular views on some of these issues, where you have a counter view on anything that's been said on this, what we've been discussing here. But the second question to you, though, is that, now, again, with the businesses that you run, so Redstone Capital is investing in a lot of, you know, again, fintech businesses, to the best of my knowledge, that haven't actively brought in blockchain or cryptocurrencies into operations. Maybe you can correct me on that if I'm wrong. And similarly for Opportunity Network. So, you're running these businesses. What is the opportunity that this presents to those kinds of fast-growing, successful fintech businesses that you're looking after right now? So we'll start with Cam and hand over to them.
So I wouldn't want to be truly contrarian to my colleagues here, because I think that the evolution in both blockchain applications for both fintech and broader industry, I think are fascinating. I think the current evolution of crypto products and otherwise are also fascinating. I think it was Vlad who said that, you know, a lot of these products are going to need to be a lot more accessible before they're ready to be used by small business owners, individuals, and others. And I would see that as an evolution that we're not there yet, and that would be a sort of crypto 2.0 or something like that, which I don't think is necessarily far off, but some sort of evolution has to occur. Now, we look closely at both blockchain applications. We build some into some of our businesses where it's relevant. And I've brought in people to look at different crypto applications, ICO applications, and otherwise. I see fantastic potential for both blockchain and crypto in certain niches, but I tend to see a lot of the, at least in the near future, a lot of the crypto and ICO world as much more akin to sort of crowdfunding rather than, and I think it was Greg who said, you know, when you're talking about smaller businesses, rather than fully fledged capital raising platforms, just because of that Wild West atmosphere. But that's how I see it.
So I would agree, and I think the key point I would want to take is Spiros when he was saying, be careful not to make confusion between the tool and what you're trying to do. And I think this is really the case, because if you have a much better tool to catch something and you have no security around it, sooner or later someone is going to lose an arm and would have not lost an arm with the previous tool, because there was a lot of regulation and safety around it. So there have been a lot of financial innovations that had kind of their honeymoon period, where everyone is enthusiastic because you only see the positive things, and then time passes and there are the first crashes, and sometimes they recover from these first crashes and they kept getting used. Sometimes they never go back to the enthusiasm they had before, not because it's a bad tool, just because the reputation of the tool was tarnished by the early issues. Think of mortgage-backed securities. You had those for 20 years, they worked well, they conceptually are diversifying the risk of people that are buying houses. What's wrong with that? Well, we all figured out together what was wrong with that. The problem was not in the tool, but the way it was used. But still, the reputation of the global crisis and so on has impacted in a permanent way the utilization of those tools. So, for instance, when we built our business, we decided to make a kind of a very, very strict choice, and rather than try to build a product that doesn't exist, and so kind of play in an unregulated space where one day regulation will catch up and we'll figure out who's the winner and who's the loser based on what each country will believe is the right way to move forward, and maybe having a couple of crashes in between. We decided to play within the current regulation framework, so we know that whatever we do is going to be stable and sustainable without having kind of these ups and downs that you tend to see. When you ask the question on where really is the opportunity and is there going to be a shift in economic power over time, The answer is yes, and not in the future, already today. Look at top companies by capitalization in the United States. They're all tech companies. And the fact is, all human beings are used to standards. Languages are standards. So you grew up in a country, the standard is Italian, French, German, and you grew up with that. But these tend to be very regional because it is very hard to keep a global standard because of distances and different culture and so on. But today, in a globalized world, the standards that are created global. And if you forget about China, that is kind of protectionist, a little bit around their own platforms, and a few other examples, you have giants like Amazon and Google and Facebook that really play on a global scale. So what I believe is we're looking at an era where the corporate responsibility and the impact of a few corporations that are really global will be much larger on the life of us all. So I think that's an area to look at, and we ourselves look at that as we have the potential to become one of those global platforms in another space compared to them. But we believe that playing in that space require a certain amount of social responsibility attached to it.
So thank you, and so you've touched on a couple of themes that, in fact, I wanted to sort of pick up on. So you've been talking about sort of sustainability here, social responsibility, and again, you know, we're in Davos, and so we need to make the world a better place. Can blockchain and the sort of the technology around this and the opportunity that it brings, can this play a meaningful role in helping to support, finance the more sort of socially important initiatives, or water security around the world, or renewables, or these other ideas that, you know, that these big ideas that celebrities talk about, but at the end of the day, who's going to put the money in? Is this something that can be a game changer in these types of areas of life? And we'll give Spiros and Vlad a chance to talk first.
I think, you know, for instance, for a theme which I think is very important, underbanked or unbanked people, you know, people who come with no identity, where blockchain can give them an identity. You know, and that's very important. Or Fintech can give them credit cards, and not to spend, but they need a credit card, or because a credit card represents a bank account. So when they go and get a job, they can tell the guy or an apartment, I am someone. Blockchain verifies it. There's some technology, of course, behind it, the blockchain technology. And I have a credit card, I have a bank account. So Fintech enables those people who have nothing, I mean, to start a new life. I mean, yeah.
Well, my answer to your question, absolutely yes. And it's already happening. It's not only make the whole things, any type of initiative or activity more transparent and preventing from any manipulation, but also it will save a lot of unnecessary cost. It will make a lot of activities much more efficient. I want to give just one example, which Greg mentioned about charity, and I have one blockchain charity project, and we make research and realize that annually to support all kind of charity funds globally, it's cost about $1 billion US. Now think for a second, this money will not be spent for all kind of organizational administration and coordination, but it will go directly to people who really need it. That's the scale just in one narrow segment. That's
Completely agree. I think one of the things we're doing is we have an ICO next month, Hyperion Fund, and we're linking blockchain to solar energy. And we believe that solar energy or renewables are absolute game changing. The age of oil is dead. You know, oil is absolutely in decline. Now, for every industry, there's people who are making money from it, who have their investment in it. And a lot of people in denial. But solar and renewables are the way forward. You're not seeing enough of it, but you know, electric cars in Norway this year, 40% of all the new cars purchased will be electric. For those of you who are world travelers and you've been to Chinese cities or Indian cities with pollution, the obvious solution is just to turn around and say, you've got to start buying electric cars. And that's going to do a lot to get rid of the pollution. Coming back to what we're doing, we hope to be building power stations, solar power stations, in 10 emerging market countries. And we believe that will supply electricity to people in more remote areas. It will supply electricity cheaper and will be absolutely game-changing.
So I would agree with the fact that sustainability is one of the goals that we have to achieve. But again, I would like to go back to the tool. So let's make the example that I agree with on you want to solve pollution problems and you go to electric cars. So majority of electric cars today are not removing pollution, or just delocalizing pollution, because the electricity is actually obtained from fuel and coal that is burnt into other places. So of course you are doing power generating through renewable energy, and that's something that will change the problem. But the point is, the electric car itself is nothing else than a tool.
Unless you have your Tesla car and you have your panels on your roof and your battery at the side of the house, which you get given free by Tesla, and you charge your house, your car from your house every day. You know, the world is changing very, very quickly.
Yes, and the point is, I agree with that. The point is, changing one piece of the chain is not sufficient to achieve the goal.
You need many tools to negate.
Exactly.
Knife is not enough.
Yes.
The knife is not enough, and so on. So we're in closing statements time here, and I'm going to get our guys to start looking into the future. And so we're in Davos in 3 years' time. Okay, so next year I reckon we still have Crypto HQ, maybe. Yeah, it's still going to be there, but it's probably not going to be in the Congress Hall. 3 years' time, what is the single most surprising, exciting thing that has happened that is changing the course of our discussion, that changes the agenda that we need to talk about?
You know, basically you want to ask me about the trends. And when I talk about trends, I make the example of a cook. You know, and you have pepper, you have sugar, you have a lot of ingredients on your table, and all the things represent some technology, like AI, machine learning, blockchain. It is not anymore one technology that interests me. What I see as a trend already now is the cook who mixes those things and makes a good meal out of it. I'm not interested anymore in blockchain. I'm interested in blockchain if I need it. If the cook thinks, I'm going to make something special with blockchain, yes. But it's a mixture of the things. So we should look for the cooks of this world. And that's the trend.
Well, I don't know, but I can tell you my prediction and my hope that we will not talk about blockchain in 3 years' time frame, because it will become mainstream. Today we are not talking about internet because it's part of our life. I also hope that we will not spend so much time talking about challenges, but again, the world is very unbalanced. There are so many issues and challenges. Unbalanced in terms of there are a lot of poor countries, there are some rich countries, there are a lot of unbalance. And I hope we will start talking about certain achievements, because every Davos I meet, we talk about challenges, but we don't talk about progress and process and achievements, at least some of the achievements. I would really like to hear this in a 3 years time frame, that we solve certain problems, or at least we have a positive trend solving specific global challenges. That would be my hope.
3 years' time. Going right back to history, I've got some great photographs of Wall Street in 1904. Wall Street in 1904 was completely horses and carriages. Wall Street photograph 1913, that is only 9 years, completely motor cars. Mr. Ford was already having an impact. And in the photo, where it's just got hundreds of motor cars, you can see 2 horses and carriages. Change happens a lot quicker when people really want to get behind the trends. Now, I slightly disagree. I think the banks have a real possibility, the traditional banks, of going the way of the record companies and the book publishers. Record companies 15 years ago just laughed at Spotify and similar apps, and they didn't negotiate properly, and they didn't recognize. I don't think banks are fully engaged with fintech and really understand how quickly the world is going to change, because modern technology is enabling everything to go mobile, and you can do everything from your phone. So I think we'll see massive movement in electric cars, in renewables, in solar energy, and in the whole area of ICOs funding it. Thank you.
I agree, I think, with some of the comments that have been made, that in 3 years' time, I'm thinking that some of the topics that are really hot today are going to become boring due to convergence. So fintech and banking are largely one and the same. Blockchain and cryptocurrencies are largely a way that we raise money, manage money, send money, etc. I think one of the things we haven't addressed today, which I'll be really interested to see how it evolves in the next 3 years, is the influence of things like AI and machine learning with the increase of processing power and the applications that are starting to be introduced to business, which I think can actually radically transform some industries. And so, it's a hot topic now. I expect it will become a much more hot topic in the future.
So it's very hard to predict what the future will hold, but there are a few things that are going more or less in the same direction, which is simplifying human activity. And that means that with fewer amount of time, you will be able to achieve more results. Either because you have platforms that enable you to connect easier and not to bike to Nice to bring your own money, or because you have artificial intelligence that is able to get 80% of the work that you are doing in an automated fashion. It's the 80% you don't like, but it's still 80%. Or because you are able to produce in a much better way through manufacturing, which, by the way, has been growing in terms of efficiency much faster than technology over the last 20 years, although it's something that feels very natural, and so we don't really acknowledge. So the more we go in that direction, and we pair that with a global population that is going up faster than it has ever gone before, and the explosion of human population has been unprecedented over the last 100 years, you will really start thinking about people more than about companies or about business engagement. And I think one of the real topic we'll start seeing, maybe not in 3 years, but in 5 or in 7, is going to be purpose. Because at the end of the day, what we really think about people for the last 100 years is how we're going to feed them, how are they going to sustain themselves. But now the scarcity of resource is something that the more we become efficient as a race, the more hopefully we can over time solve. On the other side, human beings tend to be much happier and fulfilled when they have a purpose. And usually the things that give them food is also the things that give them purpose. But the more we go on this way, the more the two things can become uncoupled. And so I think that will be a topic.
So in actual fact, before we wrap up, the moment you mentioned AI, I saw Spiros's eyes light up. So it makes me feel like we need to give him a chance to give us a final view on AI.
The one thing, we're in a business where we provide convenience to customers and services. And but by doing this, a lot of people lose jobs. It's just a fact. In AI machine learning, we always mention those two together, basically increases its speed. And that's actually one thing that makes me always sad, because if there's universal income will happen, we're going to pay people no matter what, if they work or not. But people, money is only one thing. People need purposes. And that's the more we're really involved in this space, you have to kind of worry about these things, because what's the point if we have the best, coolest products, but the gap between poor and rich and people who can afford and not afford will widen. And we can't stop it, but we have to address it, and we have to talk about it. And AI machine learning does really increase this. And closing words in general, I think something positive note, again, I hope, is, in real estate, we all know it's location, location, location. in our business, it's convenience, convenience, convenience. Not going to be successful if it's not convenient for your customer. That's all. Sorry that I had this said no, but it's something I really care about.
Well, I see that not everyone has a glass in front of them, so from convenience, 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 we can go to Prosecco, Prosecco, Prosecco. Absolutely. But with that, thank you very much, Brian, Cam, Greg, Vlad, Spiros. Great to have you, and thank you for all of you for being here with us. All right. Yeah. Right, please, exactly.